Ladies and gentlemen, good day and welcome to Maharashtra Seamless Q3 earnings conference call hosted by PhillipCapital India Private Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Vikash Singh from PhillipCapital India Private Limited. Thank you, and over to you, Mr. Vikash Singh.
Thank you, operator. Good afternoon, everyone. I'm pleased to welcome you on Maharashtra Seamless Q3 FY23 earnings call. From the management side, today we have with us Mr. Saket Jindal, Managing Director, Mr. Kaushal Bengani, Senior Manager and Investor Relationship. I just like to announce that unfortunately, due to some urgent work, Mr. DP Jindal has to travel at the last moment and he could not join the call right now. We are still hoping that in the second half of the call, he would be able to join us. But Mr. Saket and Kaushal are there to help you out with your query. Without taking any more time, I would like to hand over the dash to Maharashtra Seamless Management for the opening remark. Over to you, sir.
Hi, welcome everybody, and we are here to answer investor queries and give the outlook of the company, and Kaushal shall start with it.
Thank you, sir. Good afternoon, shareholders. Thank you for taking time out and joining us in our discussion of quarterly results for the December quarter. We have had another good quarter where margins have been very good and enabled us to maintain absolute EBITDA despite taking a maintenance shutdown in one of our seamless pipe mills. This shutdown was targeted for the first quarter of FY24, but in view of our large order book, it was taken in the third quarter of FY23. We've undertaken maintenance activities and repaired and overhauled the furnace, motors and gears, which has enabled us to improve our production. We expect production volume in this mill to improve by 10%, and this increase will be immediately apparent in the fourth quarter of FY23. Generally, such maintenance activities are conducted once every 2 to 2.5 years, and therefore we expect uninterrupted production from this mill going forward. In the third quarter of FY23, we've also undertaken prepayment of long-term debt of 315 crores, thereby bringing down our interest cost substantially. We've also completed bonus issue in the ratio of 1:1, thereby doubling equity capital of the company. We are set to meet our EBITDA guidance given at the start of the year, as margins have remained firm throughout the year and our order book remains strong. We also have good visibility of orders for next quarter as well. I would like to quickly take you through our presentation before opening the stage up for queries. At consolidated level of Maharashtra Seamless, margins remain consistent and we've generated similar level of EBITDA despite having lower production. This is clearly evident that our operations and sales are at a very strong level, and we expect similar pattern to continue going forward. In United Seamless, we are pleased to announce that we have maintained absolute EBITDA and in fact improved our margins despite having slightly lower dispatches in the third quarter of FY23. Our profit margin has also improved, and so has the earnings per share in United Seamless. We've provided a comparison of the profit and loss statements of Maharashtra Seamless and United Seamless in the next slide. On the front regarding amalgamation of United Seamless with Maharashtra Seamless, the first motion has been approved by NCLT Mumbai and the second motion has been admitted with them. Next hearing is scheduled in February 2023, and we are hopeful that the amalgamation will go through within this financial year. On slide 10, we've detailed operational and financial performance indicators, and again we talk about the steady margins which have remained despite taking a production dip on account of maintenance in one of our mills. Slide 11 talks about the EBITDA mix. As you can see, more than 80% of the EBITDA is generated through the seamless segment, and we would want the participants to take note that the seamless segment of Maharashtra Seamless and United Seamless are the growth drivers of the entire organization. ICDs continue to reduce gradually as was committed. Currently they stand at 95 crores, and we expect ICDs to be fully realized by next year, March. Our cash balances have improved. We've reached a level of 640 crores as total liquid investments of Maharashtra Seamless, and our net debt is minus 469 crores after prepayment of debt of 315 crores. This is indicative of the cash generated from our strong order book and good margins. Corporate guarantee and SPLCs continue to reduce as was committed, and we expect them to be fully discharged by September of 2024. We have given some more inputs on our capital allocation plan. The total capital expenditure that we are targeting is 852 crores, and this will be entirely funded from internal accruals. Of the projects detailed in this slide, 2 have been given priority. The heat treatment and finishing line at United Seamless, so that we are immediately able to double production at United Seamless, and cold drawn pipes which we want to expand in Maharashtra Seamless. We are also targeting setting up a OCTG line and billet preheating surface in next financial year, as demand for seamless products is expected to remain consistent. We reiterate that there will not be any requirement of any debt, and all capital expenditure and working capital requirements will be met from internal accruals. Order book has improved from last quarter, and we expect similar levels of order book to continue going forward. In Maharashtra Seamless, you have an order book in the seamless segment of 1660 crores, and in United Seamless you have an order book of 122 crores. The sustained order book will translate in improvement of capacity utilization by 5% in FY23. We've also received value addition products. We've also received orders for value addition products, especially drill pipes in Maharashtra Seamless. We received 3 new tenders, and we've completed supplies against a previous tender. We are talking about dispatch targets of 365,000 tons in Maharashtra Seamless. Maybe we'll fall short by a few thousand tons, but we expect to come very close to the given target, both in Maharashtra Seamless and United Seamless. The next 3 slides talk about the development undertaken by the company towards its customers and the marketing initiatives that have been undertaken. We've also dispatched the sour service seamless pipes in the previous quarter and are continuing our dispatches in the current quarter. And we expect more orders to come in this new value addition product that we have developed. Similarly, in United Seamless, we are rapidly expanding our customer base and we expect to capture a greater share of the market. In terms of general visibility of orders, we expect orders to remain strong because rig count have not declined, they remain consistent, and the strategic petroleum reserve in the US continues to be at an all-time low. Therefore, crude is expected to remain strong, and so will our order book. The impact of the Russia-Ukraine war remains in the seamless pipes industry, as it does in quite a few other industries. And despite the longevity of this situation, it does not appear that there will be any abatement, and we can expect good orders to come from our export market going forward. Promoters continue to increase their holding in the company, thereby reiterating confidence for all shareholders. And we've had some marquee investors in our company, and they continue to remain invested. I would now like to open the floor for questions and hand over back to Vikas.
Thank you, Kaushal. Operator, please announce the Q&A session.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets only while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Pratiksha 2 with Equitas Investment. Please go ahead.
Good evening. Congratulations on good set of numbers. My first question was on the order book front. So what would be the execution period for this order book? And what gives us the confidence of, basically just wanted to understand that, Q4 volume targets seem to be pretty high. So what gives us the confidence that we'll be able to do that kind of volumes in Q4?
In the fourth quarter, we expect a good level of production because we've undertaken refurbishment activities and maintenance activities in 3 of our mills in the past 3 quarters. In the first quarter, we've undertaken maintenance activities in our 7-inch mill at Nagothane. In the third quarter, we've undertaken maintenance activities at our 14-inch mill at Nagothane. In the second quarter, we had undertaken maintenance activities in our ERW mill. So production is expected to increase, and we are confident of achieving our stated targets because mill efficiency has increased. This is because we've overhauled motors, gears, and furnace in our largest mill, and also in our 7-inch mill, and therefore we are quite confident of achieving our stated targets. Regarding the order book, this order book of Maharashtra Seamless is expected to be executed over a period of 4 months, and that of United Seamless in a month and a half.
Okay. And on the ERW front, just wanted to understand the mix in terms of as in, the sector, and how should we look at the margins going ahead, since we've had very volatile margin profile in that segment.
Right. So in the ERW,
let me explain the ERW. In the past quarter, there was less margin, and the last quarter it came back because previously there was certain quality control issues where there was testing happening for IOCL projects.
Right.
So there we took some time to complete the testing process, and in the last quarter we made it double shift, and also there was regularization, means it came back to normal, the operations, and the shift also increased. So the production was better in the last quarter, and also the margins were intact because we are supplying to the oil and gas sector, where API PSL2, that is the product which is being used.
Okay. So the current quarter margins are a good trajectory for the ahead, right? They are more or less sustainable.
Yeah, that's right.
Okay. Thank you.
Thank you. Our next question is from the line of Saket Kapoor with Kapoor Co. Please go ahead.
Namaskar, sir, and thank you for the opportunity. As been articulated by you in the opening remark, Kaushalji and Jindal sir, that we have taken a refurbishment. There would be better yield that we are expecting. So, if you could give us some understanding what kind of key benefit in terms of tonnage or EBITDA we can expect over a period of time with the overhauling done.
So, if I understand clearly, the refurbishment is basically to regularize and to also avoid any breakdowns. So it wasn't any upgradation in technology as such. It was just a regular maintenance where we have to overhaul certain equipments to avoid any, as a preventive maintenance. So it will be regularized, and the yield and everything will be maintained. So there is no additional increase in yield. It is the same, and we continue and post the same kind of output as earlier.
Sir, in the presentation and in the order book breakup also, we find a very strong client concentration, that is from the PSU basket of ONGC and Oil India. So going ahead, taking the nature of the business and we having a dominant market share in seamless pipes, what other steps of mitigating the client concentration risk can we look forward, or how are we going to tap the export market in terms of, in your commentary it was mentioned that because of the Ukraine crisis, many European companies have stopped participating in the seamless segment. So if you could give us some more color of what steps in the annual, or the nature of the business is such that we will be having a larger price from dependence would be from ONGC and Oil India.
Right. So let me address the second part, which is the export target. So Canada has opened up for us recently because the normal value of the floor prices have been revised, which is making it more conducive and workable to export. So Canada OCTG, the oil and gas sector, has opened up again, and line pipe we were doing earlier also. So the market in Canada and USA combined is significant volume where there is no shortfall as such. So additional requirements for orders besides domestic can be exported to USA and Canada. So we need not focus on other markets besides these two because this is sufficient enough. But we still have our eyes open for orders in Middle East, North Africa, and South America. But this is may not be essential because USA and Canada is sufficient. So, but at the same time, we have to keep our trust on the marketing initiative where our quality is well established, and looking at even domestic market, our quality complaints are bare minimum, which is very encouraging, and the USA customers also are very happy with our quality. So minor complaints are there, but at the same time, we are well established, reputed vendor, and also the Chinese pipes are restricted in these markets, so by WTO. So the restriction on Chinese pipes, we are more open for these markets because we're in India, there is a level playing field because it is avoiding the dumping of goods by China. So we are confident with the domestic market and the export. We will have a healthy order book, and there is no risk as such. That way.
Right. And lastly, sir, about our investment in this rig segment. Although, as in your commentary mentioned that the rig counts have reached the pre-COVID levels, and the demand for more oil exploration activities is on an uptick globally. But since the nature of the investment, the returns does not commensurate with our main business. So those get diluted with the ROI. So taking that aspect into account, since we are contracted for a 3-year period with ONGC, does this debar us for contemplating any selling of our rig? It is a workable proposition, or we will be the ownership has to be there with the person with whom the same has been contracted. In the case there is a significant demand, or there is a option wherein you can sell the rig even if it is contracted. Just a understanding that is the option, or we can only think of it once the contract gets over.
No, let me clarify. The rig oil prices are high currently, and the day rates in the drilling sector is going up. Recently, a group company made a contract with ONGC at almost double the price of the previous. So instead of say $40,000, it's come to $75,000. So that is encouraging that day rates have gone up. And in our rig, which is in MSL, that has also been operated by a group company. And once this contract gets over, we will surely renew the contract at a much higher price. So this is something positive we expect. And at the same time, in the future, if it's lucrative and if it's beneficial to the company, we can hive off the rig to any other company and cash the capex. So means that is depends on the situation, but currently it is operational and it should remain operational in the near future, and the rates are expected to go up.
No, sir. My point was, since we are contracted for a period of 3 years, so whatever the additional benefit that is there in the current rig prices won't be percolating to our numbers. It's only an indicative that these are the
contract with a fixed price.
Yes,
so during this contract, there will be no change in the financial.
Yes, sir. And since we have just contracted, I think a few months in the month of May only, So 3 years down the line, nobody can predict what the charter rates are going to be. It may be a higher of 70,000 or lower of below 40,000 also. So my point was only a small understanding that in this interim period wherein we have contracted, can the management contemplate change in ownership in depending upon if there is emerges a buyer or any other understanding where we can hive off, or whether it in the because of the contractual terms we have to continue for 3 years? That was my question.
No, the contract is, there's obligation to fulfill the contract for 3 years. So we'll have to fulfill the contractual liability. And secondly, talking of hive off, there is no surety as of now. It all depends on the scenario.
Right. And the very last point in the presentation, it was mentioned about value-added segment of a good opportunity to address in drill pipes, subsea SAR pipes, and premium connection markets. So if you could throw some more light, what are the advancements we are taking and going ahead? How are these 3 segments going to contribute to the profitability of the company? Drill pipes, subsea SAR pipes, and the premium connection market. Thank you.
Right. Drill pipe orders we already have in hand currently, and in Oil India also, and we are executing, and it is as per schedule. In means next month onwards it will be delivering. So this is a high value added product where we benefit more than the regular pipes because of more value addition and more margins. So this is number one. Number two is the premium connections. So there we are talking of a license agreement with JFE Premium Connections, and they have audited the mill, and they are very happy with the facilities, and they are doing the final stage for signing the agreement and commencing operations.
Right, sir. And okay, sir. Once that is done, then okay. Thank you for the. I'll come join the queue again. Thank you.
Thank you. If you wish to ask a question, you may press star and 1 on your touch-tone telephone. Ladies and gentlemen, a reminder, if you wish to ask a question, please press star and 1 on your touch-tone telephone. Our next question comes from the line of Ramanan Venkateshwaram with MK Ventures. Please go ahead.
Yeah, hi, good evening. Just wanted to check, we have the order book, which almost covers more than 4 months of our production at MSL. And given that we have the order book with the pricing and also inventory that we would have in terms of raw material, how do we see the margins going forward into the current quarter and possibly the next quarter as well? Is it better than the previous quarter, or is it similar to that? How do you characterize that?
I think more or less the margins are consistent, and the steel price has corrected slightly towards the lower side. So that might give us some additional margin. And if we do value-added products like we just mentioned, premium connections and drill pipe, so that will add to our overall margins, operating margins. And also exports will help. I think in export, if we are targeting more exports, then naturally overall contribution will be higher because there we can get higher realizations.
So when I actually look at the order book over the last few quarters, the share of exports in the order book has actually climbed a bit. Is it intentional, or and it comes back to the earlier higher levels? How is it like?
No, I think in the recent past, the Canadian market was a little under investigation for duties. Now it has been crystallized. So the Canada market is once again open to us. So it will come back. In fact, we want to export more than what we did in the past. So I'm sure we shall be able to achieve record exports in the near future.
Okay. And one last question we talked about the IOC.
Hello? Yes?
Mr. Ramanan, we cannot hear you.
The line of the current participant is disconnected. We seem to have lost the current participant. The next question is from the line of Hemant Soni, individual investor. Please go ahead.
Sir, congratulations on good set of numbers and thank you for providing me the opportunity. Sir, I have basically two questions. First question is, like you mentioned in the opening remarks, that there was a plant maintenance shutdown. So, for how many days the plant was shut down and what is the loss of revenue? And the second question is, you had earlier guided in, I think, Q1 of the conference call that the company is targeting 890 crores of EBITDA in FY23. So, sir, will it be possible for you to throw some light on the EBITDA numbers for FY24 as well?
Mr. Soni, we had taken a preventive maintenance shutdown in our 14-inch mill in December for a period of 4 weeks. And plant resumed operations towards end of December, and we are getting higher level of production in that plant as per our standards. Secondly, regarding EBITDA, we had given a guidance of 895 crores, and out of that we have completed 75% of that in the first 3 quarters. So right now, actually we've done more than that. We've done around 85% of that. So I think we will probably end up closer to 1,000 crores than 900 crores, which will be evident in due course. In the next financial year, if we take an absolutely conservative number and factor in the increased level of production in the seamless segment, then we should have an EBITDA guidance in excess of 800 crores, although it is difficult for us to specify a number in absence of orders which extend through the entirety of next year. We will come up with a more accurate guidance in our next investor call after conclusion of quarter 4.
That is fine, sir. Any tentative number would be fine. Like 800 crores you have guided for seamless division. What about the ERW segment?
Sir, 800 crores over more than 800 crores for the entire organization. This includes Maharashtra Seamless, ERW, Wind and Solar, Rig, and United Seamless.
So, sir, basically there will be a drop of 20% in the EBITDA. Can we assume that?
You cannot assume that because I do not have enough data to present you with a number. This is just a ballpark number on an extremely conservative basis.
Okay, sir. Thank you, sir.
Thank you. A reminder, to ask a question, please press star and one on your touch-tone telephone. Our next question is from the line of Saket Kapoor with Kapoor and Co.
Just to reiterate what Kaushalji just mentioned, sir, you would be in a much better position, I think so, post your first quarter numbers maybe for the next financial year when a proper EBITDA guidance could be given to us. I think so. When you first gave the guidance for annual guidance, it was in the first quarter of this financial year. So whether at 800 number or 1,000 number or any number between that or a conservative guidance, I think so, if I'm not wrong, you would be in a better position, the team would be in a better position to guide us on the path during the first quarter. Is that understanding correct, or we should keep this conservative number of 800?
Your understanding is correct, and thank you for clarifying that.
So we will wait for the first quarter to get, but what the underlying fundamentals are, they are guiding to a strong story ahead. That is very well given in the sheets presented to us. So that I think that understanding also should be taken in that way. Sir, it is mentioned that we are also taking steps for this monetization of investment in the Singapore subsidiary. So if you could give us some understanding, what is that current net NAV or net asset value, or what are we trying to explain by these steps for monetization of investment, sir?
The value of the investment in the Singapore subsidiary has increased because crude oil is at a higher level and value of rigs has increased. So the opportunities available to us for monetization has increased. However, we will not be able to go ahead with monetization immediately because there is some debt on the rigs in which the Singapore subsidiary has invested. And once that debt is reduced, then we can probably go ahead with monetization, although there is no such definitive plan at the moment.
Right.
So when I say the value has gone up, if you look at our financials, we have to restate the value of the equity investment at the end of every financial year. There has been a gain of around $2.1 million on the valuation of the investment.
And what is the total value currently for the investment, sir?
Total value in terms of INR is 16 crores at Maharashtra Seamless standalone level. At consolidated level, it would be closer to 300 crores.
No, sir. Come again. 16 crore and 300 crores is different size. Did not understand.
So at consolidated level, the investment would be at 300 crores.
This Singapore investment only, or you are clubbing everything?
No, Singapore subsidiary, Maharashtra Seamless Singapore.
Okay. That investment is worth 300 crores.
Yes.
At the consolidated level.
Yes.
Okay. Earlier, sir, I think so. Jindal Sahab has also commented on the bonus issue being a value accretive step taken for the investing community. However, it has its own pros and cons. So going ahead, since I think so, we did hire the price water super agency for this merger with USTPL with MSL. So going ahead, we would look the management to take more steps and involve or engage agencies to create value for all the stakeholders. And it is very much evident with the type of kind of cash generation the company is doing and the valuation being given by the market. So I would recommend, or whether suggest on my part, would be that proper agencies who look after for this value creation for the company must be hired from the company level so that the process can be speed. So it will get the traction. That is what it is, my understanding. And in that process, I think so, sir, going ahead, we should also look for hiring an in-house or creating an IR team also. That would be another value addition so that the dissemination of information and the right valuation could be achieved. So these were my suggestion. If it merit any, if they derive any merit, they should be deliberated on. Thank you once again, and all the best to the team going ahead.
Okay. On the point of value creation for shareholders, we've completed bonus issue in December, and in the next board meeting, we will come out with a dividend policy. We've done a lot of work in the past year and a half in making the company simpler and more easily accessible to all stakeholders. We've put in a lot of effort to make it more investor friendly, and the only point which was remaining in our perception is the dividend policy, which we'll come out with in the next board meeting.
Right, sir. And it would be very unfair on my part not to applaud Mr. Kaushal Dagnani also. He has also played a very important role in communicating and creating awareness among the investing community. So all the best to you, Kaushalji, also. Thank you, Jitu sir, for all the reply.
Thank you.
Thank you. A reminder for all participants to ask a question. Please press star and 1 on a tone telephone. The next question is from the line of Mr. Vikas Singh from Phillip Capital India Private Limited. Please go ahead.
Hi, sir. So I have just a couple of questions. Firstly, regarding our capex. So how much we have spent in FY23 9 months, the pending capex for FY23, and what are our targets for FY24 spend?
In FY23, because we have not spent any significant amount towards the capex which is given in the presentation. We are targeting 2 projects which we will execute on priority, and we have floated necessary inquiries for the same. Actual expenditure will start in next financial year.
So only for that 2 new projects, as the maintenance capex probably would go through in the next financial year.
Yes.
Understood. And secondly, I just wanted to understand our bid book size, basically the next 6 months. What is the visibility in terms of orders in India as well as in abroad? So if you could give us some insights into that.
Order book remains strong, and going forward, we have good visibility of orders. In the export market also, especially Canada, we have started exporting OCTG products, and we want to expand further both in US and Canada. There is good demand in US and Canada on account of rig counts remaining stable. There is consistent demand on that front, and with the US government buying crude from the market, we expect this demand levels to continue. In the domestic segment, I put out a point in my presentation that ONGC has a demand of 1 lakh tons every year, additional demand of 1 lakh tons every year, on which is regular. And even in our current order book, out of the total seamless orders of Maharashtra Seamless of 1,660 crores, 541 crores is from ONGC and Oil India. These orders will be executed over the next 4.5 months, and we expect orders to get replenished and the strong position to continue, both in United Seamless and Maharashtra Seamless.
Understood. And sir, just once again, on your steady state EBITDA per ton guidance, because that 800 crore, which is the lower end, seems to be quite conservative, considering we can have a 10 to 20% volume growth next year.
Right. So you are right, and I don't have any data with me. It is the bare minimum number which will come at very low EBITDA per ton. However, our steady state guidance for the current quarter would be around 18,000 for Maharashtra Seamless and around 23 to 24,000 in United Seamless.
Understood.
This is for the fourth quarter.
Yes. And lastly, what was the mix of the export orders this quarter?
In the current quarter, in Maharashtra Seamless, in the third quarter, in Maharashtra Seamless, exports were 18% of total sales.
Okay. So despite that, we have done almost 30,000 EBITDA per ton in United Seamless.
Yes.
Understood. That's all from my side.
Thank you.
Thank you.
Our next question is from the line of Hemant Soni, individual investor. Please go ahead.
Opportunity again. Sir, do we expect Q4 numbers to surpass Q3, and what kind of capacity utilization are we looking for in Q4? Because I think in Q3 we have 60% capacity utilization, right?
Sir, in Q4 we expect the numbers to surpass that of Q3. In Q3, capacity utilization was at a lower level on account of preventive maintenance being undertaken in one of our mills. We have clarified that in the notes to accounts in the financial statement and also in slide 10 of the presentation. Therefore, capacity utilization, since the mill will now be working with improved efficiency as per our standards, we expect much better capacity utilization in the current quarter and increased levels of production in the current quarter.
Any number you can specify, sir, on the capacity utilization part for Q4?
Sir, they will be better. I don't want to specify numbers. There will be better capacity utilization, I can say for sure. And I've given the targets in slide 18 of the presentation, and we are quite confident of achieving our targets. If we do not achieve our targets, then we'll come very close to our targets.
Okay.
Right now, we are, despite taking preventive maintenance shutdowns in 2 seamless pipe mills in the past 3 quarters, we have achieved 69% in Maharashtra Seamless and 68% in Maharashtra Seamless ERW segment in 3 quarters.
Okay, thank you.
Thank you.
Thank you. Ladies and gentlemen, that was the last question for today. I now hand the conference over to Mr. Vikash Singh for closing comments.
On behalf of Phillip Capital, I would like to thank Maharashtra Seamless Management to give us the opportunity to host the call. And I would like to hand over the dash to Maharashtra Seamless Management for any closing comments. Over to you, sir.
Thank you all the investors for their queries, and I hope we deliberated and answered the necessary queries. So we are confident that we will meet the expectations of the investors in the coming year and also in the future. So we are constantly vigilant on the financial numbers and also the operations. So we take proactive decisions in our operations day to day for improvements and for also in the marketing side for lucrative orders and to maximize margins, returns, control our raw material cost. And also we are doing ERP for operational efficiency, the new version of ERP. And we are also, as we mentioned, adding value-added products, and also we are doing ventures in license agreements for value-added products. So we are upbeat, means the domestic market, ONGC and others. Oil sector, there is a good demand coming for new wells as well as replacement demand. So there is no shortfall of orders. 1 lakh ton in oil sector domestic is in the pipeline. So besides, I just mentioned Canada has opened up. So the industry as such is upbeat, and oil prices are holding also. So I would say the outlook is very positive, and investors should be looking at good returns. Thanks.
Thank you, Mr. Jindal. Thank you, Vikas. And thank you, investors, for taking time out.
Thank you, everyone.
On behalf of Phillip Capital India Private Limited, that concludes the conference call. Thank you for joining us, and you may now disconnect your